Just because we all think Bitcoin's going to, a million or more in the long run, doesn't mean we can't see an 80% drawn down in the meantime. And if you are too vulnerable, if you've overextended yourself, then you might not even survive to see that $1 million Bitcoin in the first place. If you have 500 megawatts of mining machines to put to work, an on-grid data center in Texas playing the demand response game in ERCOT is not such a bad strategy. But you're only one crypto mining tariff or one hostile piece of legislation away from having your entire operation severely impacted. That's why we have 7 data centers across 3 states, so that way we can stay nimble and make sure that even if something bad happens in one regulatory environment or there's a big fuel surcharge in one area, we're still insulated as a company. You have to assume near term, things are going to continue to be pretty painful. Like, this is still a historically bad time for miners, but the light at that end of the tunnel is when Bitcoin pumps, as we know it will, Bitcoin miners will make massive returns.
Introducing the Blockware Marketplace. Start mining Bitcoin today. This has the potential to transform the mining industry, as now anyone can buy a Bitcoin ASIC using on-chain or Lightning, see its historical and live hash rate before purchasing, and be earning Bitcoin mining rewards in minutes. This brings transparency and turnkey mining to a whole other level. Start mining Bitcoin today at marketplace.blockwaresolutions.com. Hey everybody, welcome back to the Blockware Intelligence Podcast. This week I have on Drew Armstrong from Cathedra. Drew, welcome.
Hey Joe, thanks for having me.
Absolutely, glad to have you. Let's jump right into it. Can you tell the audience a little bit about yourself, your background, and how you got into Bitcoin?
Yeah, sure thing. So effectively, I'm a reformed finance bro. Myself and also the CEO of Cathedra, AJ Scalia, we grew up together and both grew up outside of DC in Northern Virginia. We both found ourselves working on Wall Street and hating our lives effectively. I was working in esoteric securitized products at Barclays, helping do data center securitizations and collateralized fund obligations, and basically anything that's kind of esoteric and if it was big enough would cause a recession. That was what my desk did. I started that right out of school, and it was 2017, so I found religion in Bitcoin during that bull run shortly thereafter, and basically I knew immediately I didn't want to do banking, but then finding Bitcoin, it just made that decision so much more obvious that it would be amazing to go work in Bitcoin full time. I ended up going to Galaxy Digital. I was actually recruited by AJ there, and we basically worked on the investment banking team and the venture team there for a little while. Worked on actually the first mining manufacturer IPO in Canaan back in 2019. We worked on a couple of capital raises for mining companies, and as 2 Bitcoin maximalists in Galaxy, mining was really one of the best places that we could work on, just because miners need to raise money. It's a very capital intensive business, and there's a lot of interesting investment opportunities, especially in that 2019-2020 time frame, as a lot more hash rate was moving over to the US in the first place. And we actually ended up helping start the mining team over at Galaxy with Amanda Fabiano. The 3 of us were the original team. We worked on the prop mining operation. I spent a lot of time working on the mining equipment lease business over at Galaxy. We did a bunch of research for Galaxy with respect to mining over the years. And then in summer of 2021, we both left. And shortly thereafter, we were recruited by Marty Bent to come run what was at the time Fortress Technologies, one of the first Bitcoin miners to go public back in 2018. And we changed the name to Cathedra in December 2021, a few months after joining. And the rest is history.
Yeah, I like it. I feel like you guys are like some of the, youngest guys in the space, but you've been very successful and you have like a real, more traditional background going into the Bitcoin space, which is awesome. Were you always like a Bitcoin maximalist per se, or did you originally did you quickly see that Bitcoin was the innovation here, or were you kind of distracted at first at all?
Yeah, so there's naturally, I think, always some distraction. Having first gotten into Bitcoin in 2017, obviously you see number go up, and the first thing you see is Bitcoin. Naturally, you start hearing about these other cryptocurrencies and you feel this impulse to go read every single white paper. And you feel this like deep sense of intellectual guilt for not understanding every single thing in all these white papers. And then there comes a point where you realize that maybe these white papers are actually mostly just scams. And so I bought Ethereum in like 2018. I never actually bought that much, but later on in 2018, I basically went Bitcoin only. And it's definitely a growth process, right? Because for me, it wasn't about money at first. It wasn't about the money. It was about, oh, this is scarce. This is going to go up. And then as time went on, I started going into some of it wasn't Web3 then, but like Blocksnack was a project that I was really interested at the time. And thought it's like, wow, this could really revolutionize the internet and all that stuff. And then after basically coming in contact with the Bitcoin standard, you sort of realize, oh shit, it is just Bitcoin and it is just about the money. So definitely, I had some shitcoining. I never shitcoined all that hard. Certainly never shitcoined enough to be rich, but definitely, I think I probably found religion in Bitcoin in 2018, and it was made much easier because at that point there were a ton of just excellent thinkers in the space who were making Bitcoin maximalism really accessible for a newbie like me, like Marty, Ben, Matt Odell. I'll forever be grateful for them for teaching me so much, both in person and on the pod. And then, obviously Nick Carter's writings back in 2018 were hugely influential to me as well. So that was really the point, I think, when it became clear that it is about Bitcoin. And so then going to work, working at Galaxy, there was a lot of people with different, who had different religions than mine. And so it was hard to sort of find Bitcoin maximalism within Galaxy for a time, but was lucky enough to do so.
Yeah, I remember listening to Tales from the Crypt, like walking to class back in 2018 in college. So definitely the same boat there. I want to dive into some of your mining experience. I know you've been leading Cathedra, a public Bitcoin miner. 2022 bear market was pretty harsh. How can you describe that experience?
Yeah, it's a great question. And they say the best returning fund of all time is Hindsight Capital. But just to kind of maybe rewind then 18 months and talk about what the world looked like then, where we thought it was going. When we first joined, we just seen, call it like we're still in the middle of the hash price super cycle of 2021, right? So 2021, Bitcoin pumps in Q1. You have Uncle Elon buying the coin. You have just this crazy hype cycle. Laser eyes come out. And then despite the fact that Bitcoin retraced by about 50% that summer, the China ban really maintained hash price at really high levels. And so, you're still looking at 30-cent hash price throughout that summer. And when we took over in late September 2021, it was definitely our view that potentially this cycle had more legs to it. We didn't think that 60, 69 was the top when that hit in November. And especially as the Fed talked of increasing interest rates, we were of the view that the Fed probably wouldn't be able to raise interest rates for long because something in the credit markets always break, right? So this is something that Parker Lewis has written at length about in his piece Ender's Game, something Arthur Hayes talks about with far greater precision than I could right now extemporaneously. But our view is that there was more leg to the cycle. And at the time, we were really focused on expanding our mining operation. So we raised a bunch of capital. We purchased, 5,100 S19J Pros and S19 XPs within the first couple months of joining because we knew that mining's a scale game. The faster you can scale up, the better. And we thought there would still be some strength in we thought the approach of Mara and Riot of the 2019, 2020 era where you buy machines, you raise capital on the back of that newly increased enterprise value to sort of fund those purchases. We thought that would be a good way to bootstrap and to reach scale quickly. We also were looking at the on-grid environment in the US, and we saw that really the lead times were massive. Even for a hosting site, you would need to have 6-month lead times. Some of them would ask for 1 to 5 year prepayments for power. And we looked to off-grid as potentially being a way to insulate ourselves from that, a way to control our own destiny. And, we're also just really bullish on off-grid in general. So we decided to start manufacturing our own infrastructure. We were really running full steam ahead at off-grid. And then some things started to happen in towards the end of Q1, beginning of Q2, 2022. One, the off-grid economics really changed during the energy crisis, where gas prices were going up. And because oil prices were so high at that time, the generators that one used to lease when mining off-grid really also blew out in terms of cost. So if we look in 2020, it would have been possible to mine off-grid using flared gas, paying half a cent per kilowatt hour roughly for the gas, and then roughly 3.5 cents per kilowatt hour for the gens, right? So all in, you're talking about 3.5, 4 cents, something in that ballpark. About a year ago, really in Q1 2022, you saw the genset leasing costs blow out of the water. So now we're talking about 7, 8 cents per kilowatt hour for the gens. You're talking 1, maybe 2 cents per kilowatt hour for the gas. And so then you end up in a situation where you have paid for, you paid all the CapEx for vertical integration, but your OpEx is still, roughly in line with what hosting rates would have been at the time. And so at that point, we had to make an adjustment. We'd already started manufacturing. We'd already built a bunch of these rovers. We were also experiencing supply chain on the rover standpoint, supply chain issues. So things that we expected to receive within a month, sometimes you never received them at all, or they took 6 months. And so around that time, we basically had to make a pivot. And we looked at, okay, we just need to get hash rate online. We need to get cash flow coming in the door. And the best way to do that was to take advantage of some hosting space that had popped up because other people had fallen through in their contracts. And so we put some hash rate to work there in a more capital efficient manner. Then we see the Luna stuff happen. And really now I think we're talking about, really May 2022, really. And when Bitcoin hit 30K, something that I certainly did not think was possible. The Fed had started hiking, but we thought something would break. And it turns out we were about 12 months early in that prediction. But seeing Luna crash, we basically came to the view that our worldview might be wrong. We need to pivot, and we need to make sure that this business survives, because our first and foremost, our obligation is to the shareholders. So we made the decision to restructure our balance sheet. We sold all of our Bitcoin to pay down some debt and make sure that we were as resilient as possible in case things got much worse. Obviously, things did get much worse over the rest of the year. And so as leading up to, say, the FTX stuff, we again had to make some other hard choices in terms of cutting cost. But so I guess maybe to zoom out, for us, there was a lot. The world that we thought we were walking into 18 months ago ended up being not that world at all. Our predictions were wrong. We had to readjust, and we had to make sure that above all else, the company survives. And so I think it was definitely a humbling experience where AJ and I are both Bitcoin maxis. We're both tremendously bullish on Bitcoin in the long term, but it's definitely been a really healthy education in terms of risk management, where just because we all think Bitcoin's going to a million or more in the long run doesn't mean we can't see an 80% drawn down in the meantime. And if you are too vulnerable, if you've overextended yourself, then you might not even survive to see that $1 million Bitcoin in the first place.
Yeah, I think that was a really good recap of last year. I mean, I joined Blockware November of 21, and about the same time when hash price was 40 cents. Everything looked great. It looked like we were about to go to 100,000, and then after that, just a treacherous bear market. So definitely also a humbling experience to live through Bitcoin bear market and be working in the space full time. It's crazy.
And actually, so maybe just if I could just add on that.
Yeah.
I think it's funny too how at the time I was so strongly of the view that the 4-year cycle was over. Bitcoin is too important from a macro context. If anything, we may not see crazy pumps, but we're certainly going to see less volatility. And I think it just goes to show what leverage can do and kind of the systemic fragility that leverage can bring into a system. But it's funny how in hindsight, like maybe last year was just 2018, maybe this year is 2019. And it'd be kind of like, it would be hilarious if in hindsight, the really correct approach was just the smoothest brain of just 4-year cycles. But I don't know. I still think Bitcoin's a dynamic system. The past is no indication of how the future will be. So,
yeah, that's fair. So I guess moving forward, what is your strategy for Cathedra? Are you guys looking to just continue, I guess depending on market conditions, are you guys looking to continue deploying more hash rate and like hosting facilities where available? Do you ever intend to go back to off grid? What are you thinking for, the next year or two?
Yeah, totally. It's a great question. I think from our point of view, our team is really talented. AJ and myself, we have a lot of experience in mining on the finance side, but Reed Browning, Isaac Fithian, basically our CTO and head of manufacturing and field operations, respectively, they were co-founders of GAM. They have tremendous experience. They've been publishing a lot of work around their underclocking. They have a ton of experience with off-grid. They have a ton of experience building infrastructure. They designed our rovers and helped design the first GAM boxes as well. So the way we look at it is, and also shout out to Sean Thai, our CFO, who's also been working in mining for years. I think we have a really talented team. We are not a massive miner, but what we can do is be scrappy. And about a year and a half ago, on an investor call, I talked about how our goal was to be the cockroaches of Bitcoin mining. And I think that meme has sort of ended up, staying true and ringing true. And that's really how we think about ourselves, is that we know we can do a lot. And so what we're going to try to do is be opportunistic as possible and basically find the best, most capital efficient ways to deploy the highest quality, highest profitability hash rate. So what does that look like? Well, one, we still believe diversification is really important. That's one of the reasons we went into off-grid in the first place. Obviously, if you have 500 megawatts of mining machines to put to work, an on-grid data center in Texas playing the demand response game in ERCOT is not such a bad strategy. But you're only one crypto mining tariff or one hostile piece of legislation away from having your entire operation severely impacted. So we still care a lot about diversification. That's why we have 7 data centers across 3 states. So that way we can stay nimble and make sure that even if something bad happens in one regulatory environment, or if there's a big fuel surcharge in one area, we're still insulated as a company. I think number 2 is continuing to be scrappy. Actually, let's go back to diversification. Part of that is getting back off grid, right? And getting a foothold off grid. So that way we're not only touching grid wires and maybe insulate ourselves a little more from any federal regulatory risk. Number 2 is just continuing to sort of stay scrappy, looking to use the things we found with firmware and underclocking machines in a strategic way so that we're able to deploy the same machine with greater profit than most any other miner. And then, I think lastly, it really just comes down to being opportunistic because as we found out last year, we were really focused on going off grid. It turned out we were going gung-ho into off grid at the wrong time. And so there's a lot of lessons there for sure. But I think everyone has the goal of trying to accumulate as much Bitcoin or hopefully to create as much shareholder value as possible. Like hopefully that's the goal. And so if that is the goal, then I think it's important that you don't get too attached to any one tactic because the terrain of Bitcoin mining changes all the time. And so we want to get back off grid. We will continue underclocking our machines opportunistically to make sure that we're producing as much shareholder value as possible. But above all else, we want to be cockroaches that can survive no matter what, that can find the way to squeeze as much lemonade out of any given opportunity or any given circumstance. And yeah, basically just find the way to win in Bitcoin mining because it is a game of inches. Everything adds up.
Yeah, definitely. Can you dive more into that idea of underclocking? I know your team has put out some really interesting research on that topic specifically. Can you maybe very broadly explain what it even is to the audience and then maybe dive in deeper into what you guys have found?
Yeah, definitely. So with respect to underclocking, we found ourselves in a position end of last year where we had a great deal of machines coming in. And we had, this post FTX, you're seeing Bitcoin less than 20K. You are seeing hosting prices still pretty expensive. On-grid energy, just energy in general, was still expensive. And so we basically decided to, really, I can't even say we. It started with kind of our cowboy CFOMO, Isaac Fidian, who basically just said, well, what if we found a way to squeeze all of these incoming S19J Pros into our existing site in Washington, kind of the legacy original asset for Cathedra. And so we looked to see if that was even possible, because Brains OS Plus still didn't even really support all of these different types of control boards and PSUs. We ended up finding out that it was possible. And when we just found a way to squeeze all those in, we thought maybe you might see like a marginal increase in efficiency, but we ended up getting down to 22 joules per terahash. So I think in that instance, it really was a situation where desperation led to innovation, and we were forced to, out of that desperation, find something pretty interesting. And then now that's a whole new tool that we can deploy basically at will, where we've underclocked some of our hosted sites in order to maximize the operating profit from that site. Others we held at stock settings because that generated more operating profit. And so I think it's really just like an interesting tool that you can use. And the team's been also doing a ton of work on underclocking what's miners and seeing what's possible there. And so potentially you have this ability where you can buy a machine at a certain efficiency rating, stock efficiency rating. And if you can basically improve by a whole generation in terms of efficiency, going down from say 30 joules per terahash to 22 joules per terahash, going from 45, 50 down to 38, that becomes a totally, the ASIC procurement market looks totally different to you, because those old gen machines actually have a lot more value and the flexibility of, if there's a bull market, perhaps you return those to stock settings.
Yeah, it's interesting thinking back, like 2021, everyone was trying to like get as much hash rate on as possible and just even potentially overclock your machine just to make as much Bitcoin as you possibly can. And then now it's like everyone's just grinding out each little efficiency grab that they can get, and being able to do like 22 joules per terahash on a J Pro, that's pretty impressive and obviously pretty helpful when times are tough. So that's awesome. During like 2022, did you guys ever, I know you guys were like, I guess, buying rigs back in 2021 and potentially even early 2022. Were you guys like selling rigs at all, or were you just constantly like owning them and like looking to deploy them in the most capital efficient way as possible?
And sorry, is this backward looking or forward looking?
I guess like backward looking, like what happened in 2022, yeah.
So Q4 2021, we basically bought those machines, and we also bought some What's miners, like 182 of them. So 2021 was all going long ASICs. 2022, the only ASICs we sold I guess there are sort of two buckets of ASICs we sold. It wasn't a majority of our fleet, but we tried to sell all of the XPs, and we locked in a purchase price of $49 per terahash. That was around the same time that we restructured the balance sheet, sold our Bitcoin, paid down our debt. And so one interesting takeaway from that experience was, at the time, the indexes were basically showing that the fair value for an S19 XP was something like 60, 65 bucks a terahash. When we actually tried to sell ours, and granted it was a futures order, granted it was a small amount, we found basically no bid until we got to 49 bucks per terahash. And so I think that kind of shows, and it's something you've seen with the whole ASIC-backed lending market too, is just really how thin these order books are. If you really do try to move machines and you need to move them fast, you'll find that those whatever that index price is just far from reality. That was 600 machines, as we publicly disclosed. Months later, after some shipping delays and some delays picking the machines up from the manufacturer, the buyer walked away, and so we ended up with 200 left of those, because they'd already paid for 2/3, we'd already shipped them 2/3, and we walked away. Now, by that point, I think the fair value of an XP was something like 25, 30 bucks a terahash. So I think we still feel good about that sale. And then the second category is, conditions were deteriorating last summer, we made the decision to take reduced order sizes from Bitmain. For those of you who are unfamiliar with futures contracts, you'll pay something like 10, 20% up front. You'll pay 30% 6 months out, and then you'll pay the delta right before the machines are shipped, around 1 month before. And so as Bitmain adjusted the purchase price, or adjusted the price for each month's batch of machines, we decided to take reduced delivery in order to preserve cash. And so as a result, you can think of it as a sale, but effectively that was 400 machines less that we took delivery of, and basically decided to retain cash.
Yeah, the ASIC trading market and like brokerage market is definitely, has been very fragmented, and I feel like it's getting better, but it's still, pretty crazy. It's the Wild West. I don't know if you've seen, we launched at Blockware, the Blockware marketplace. So maybe next time when you guys have to sell rigs or you want to buy more, you can use that platform. We can get you guys onboarded.
No, and I think those platforms are going to be, they're so important because I think about, actually, fun fact, AJ and I's first ever ASICs that we ever bought personally, in Q1 2020, we bought through Blockware, through Matt D'Souza. There was no platform at the time. At the time, it was messaging Matt on Telegram. We'd already met him in person, so he seemed like a reasonable enough guy. Negotiating on Telegram, then sending GUSD to him so he could, because we couldn't go into the bank to send the wire during COVID, and we were like, okay, maybe we'll never see this again. Fortunately, though, there were S17 pros. They ended up working great. The heatsink issues had been resolved by that point, so it ended up being a good investment. But yeah, shout out Blockware, shout out Matt D'Souza, rest in peace.
Nice. Yeah. I had pretty much the exact same experience. I bought my first ASIC from either Mason or Matt in probably Q1 of 2020 and mined a lot of Bitcoin with it.
Beautiful.
So pretty cool. But yeah, and I had the same experience. I went to the Blockware website. I sent Matt some Bitcoin, and I was like, I hope I actually get this machine and it actually works, because this is so new and sketchy, and it worked. But now it's like we've come a long ways since 2020 as far as like transparency in mining. I mean, the Blockware marketplace is now like you can pay over the Lightning Network, buy a rig, and it can be hashing to your wallet within like 10 minutes. So it's like it's pretty different from how it was when we first bought our first machines.
Yeah, no, it definitely is different. That was also before the Bitcoin mining and energy debate too.
Yeah,
Simpler times back then.
exactly. I definitely want to get into that later in the podcast. I want to ask you about the 2024 halving. How are you thinking about that as a Bitcoin miner, and are you preparing for it, or what are your general thoughts about it? Foundation is one of my favorite Bitcoin companies. Their product, Passport, is one of the best Bitcoin hardware wallets on the market. It is air-gapped and highly secure. I strongly encourage you to go to foundationdevices.com and use the code BLOCKWARE and get $10 off your Passport. It's a great way to easily and securely store the private keys to your Bitcoin. Stampseed's DIY toolkit gives you the ability to hammer the seed words generated from your Bitcoin hardware wallet into commercial-grade titanium plates using professionally designed metal stamping tools. Their plates are fire-resistant, crush-proof, non-corrosive, and will not decay over time, allowing you to hold your Bitcoin securely for the long run. Go to stampseed.com and use the code BLOCKWARE15 for 15% off. This offer is valid through May 2023, so get your Stampseed today.
Yeah, so I think the only way, first off, all models are wrong, just they can be useful. I think we're not going to pretend to be the Nostradamus of the halving and to say this is exactly what's going to happen to Bitcoin price and the stock to flow model will be proven true yet again, or any of that bullshit. I think for us, what it really comes down to is making sure we're sufficiently insulated in terms of what our break-even hash price is, making sure that if things do get worse, like they did after the last halving for 3 to 4 month period, we're still fine. We're able to withstand that. But I think for us, it's mostly about risk management, and I think a lot of that's learning lessons from previous from basically this last cycle. Just making sure that we're sufficiently diversified, we have low enough cost operations, and the fleet's efficient enough that even though undoubtedly some will need to shut off, we are able to keep hashing, keep producing cash flow. And so I think part of that is just assuming that whatever hash price is going into the halving is going to cut in half by 50%. And I think that's just kind of table stakes if you want to make sure that you're protected.
Yeah, that's definitely fair. I guess, what is your outlook for hash price? I agree, like probably post halving it could be some of the lowest it's been in a while if the price of Bitcoin is not, at least around here or significantly higher. I mean, how low do you think it could go, over the next 1 to 3 years? And then if we go into a major bull run, how high do you think hash price could maybe get if times get great again?
Yeah, so I think in terms of the short term, it really is all, I can't predict Bitcoin price in the short term. I've never been a good trader. I've never even felt the temptation to 100x on BitMEX. But from my point of view, short term, it's all about network hash rate. And I think we have to assume network hash rate will continue to grind up. I've had a couple tweet threads basically speculating based on assumptions around how many machines Bitmain and MicroBT can produce each month, what that means in terms of network hash rate. And I think you kind of have to assume that those all get plugged in. So, who knows, maybe that's something like 10x hash a month. Obviously, we had a ton of idle inventory on the sidelines at the end of last year. I think that a lot of that is pretty close to coming back online. And that's why you see this jump from, end of last year, December 31st, network hash rate was 255 exahash. Now I think 7-day average is 350. So we basically had 100 exahash come online. I think it'd be reasonable to assume that the vast majority of those idle, like competitive gen machines are already online. And so now it's just incremental. So I think we've eaten, for my view is that, and I could be wrong, I've been wrong before. If Bitcoin does pump from here, we're now finally at the point where we've taken enough of that idle inventory in terms of hash rate offline that hash price will run to. We've really been range bound between like, $50 a petahash and $80 a petahash for the last 6 months. And so I think now we're finally in a position where if Bitcoin, gaps up to 35K, I think that will accrue to hash price in a different way than, the run up from 16K to 30K. And so I think you have to assume network hash rate is just going to keep, grinding up over the course of this year. And so if Bitcoin goes sideways, that means hash price goes down. Now, I think when hash price starts getting into this $60 a petahash range, that's when you start seeing folks with S19J Pros at retail hosting rates of like 8 cents, 9 cents. That's when they start to come underwater. So I think there's some resistance around that $60 per petahash range. But basically, unless Bitcoin really pumps and gives us some breathing room, I do think we'll continue to kind of be range bound there. Now, longer term, I think is more interesting. So you and I both think Bitcoin's going to 10x at least. If we think about what that means, I think currently, last time I checked, the Cambridge estimate for Bitcoin's network consumption is something on the order of magnitude of 15 gigawatts of energy globally. So if it's 15 gigawatts of energy globally and Bitcoin 10x's, for hash price to stay flat at this like $80 per petahash level, we're talking about 10xing the energy usage of the Bitcoin network, which we're talking over 100 gigawatts, right? That's a fuck ton of energy. That's more energy than the Texas grid. Like that's just a lot. That's a lot of energy. And it's going to take a long time, not only to build the transmission and the data center infrastructure to support that, but even just the energy infrastructure to support that as well. People will talk about how the flare gas in the United States alone can fund the Bitcoin network many times over. But I think there's a big economic that you need to dose that with some economic realities about just like how expensive it is to utilize some of that flare gas, some of the infrastructure you need there, the piping, the generators. Like it's easier said than done, even though there's a massive opportunity there. And so for me, that's where it gets really interesting. If you were talking about 100 gigawatts pre-halving or post-halving, maybe that's still, I haven't done the math in a while, but something on the order of magnitude of 50 gigawatts of new Bitcoin mining infrastructure that needs to come online. It's just so much power that I think that's really what the upside of Bitcoin mining is. And it's sort of a tale as old as time. If you're a Bitcoin miner, you're betting that Bitcoin price outpaces network hash rate. It's sort of like, it's always been true, it always will be true. And when you think that Bitcoin can 10x from 30K or whatever it is we are at now, then it's easier to get comfortable deploying hash rate because a hash in the hand is worth 2 in the bush. And it takes, it takes a long time to deploy infrastructure, especially when everyone else in the world is trying to deploy mining infrastructure at the same time. So again, I think you have to assume near term things are going to continue to be pretty painful. Like this is still a historically bad time for miners, but the light at that end of the tunnel is when Bitcoin pumps, as we know it will, Bitcoin miners will make massive returns.
Yeah, I fully agree with that. It's like looking out over the next 5 years. You gotta, if you're in the space, you're bullish on Bitcoin. You gotta think that at some point there's going to be another large bull run, and there's just no way that hash rate is going to be able to keep up with the price of Bitcoin during that time, for the exact reasons that you stated, in my opinion as well. So I think it's super interesting, great point. What do you think about like the Bitcoin mining industry, like very long term, like beyond just the next, bull run? Will the Bitcoin mining industry always grow? Will it eventually like stop growing? What do you think is going to happen? Because like the block subsidy is eventually going to trend towards zero. Obviously, at that point, miners are going to live off transaction fees. I guess, what are your thoughts very, very long term for maybe like a decade or 2 decades or even more out?
Yeah, and that's a really good question. So I think one, just to tie into a conversation we are having internally earlier today, a great point that AJ made is how Bitcoin mining is sort of this funny business because if you're wrong and Bitcoin fails, then as a miner, you know, you're fucked. And then say Bitcoin does succeed, as a miner, potentially it's still really hard because you're competing with nation states mining Bitcoin, you're competing with energy companies mining Bitcoin. Like if Bitcoin mining really does saturate the energy sector, you're still maybe fucked. So it's a funny business like that. Now if you do have hash rate live for the same reason we mentioned and Bitcoin pumps, you have a serious advantage. You have a serious opportunity and window to earn some crazy returns. Now, I think talking about what that saturation might look like. Have to shout out to Drew Bansel and his idea from his refactor talk in 2018 entitled "The Blockchain Mind Candy," where he discussed the Nakamoto conjecture, which effectively postulates that Bitcoin mining will saturate the energy sector until the marginal revenue from using a kilowatt hour to mine Bitcoin will equal the marginal revenue of selling that kilowatt hour to the grid. Obviously, the energy market is global, but also very localized, and there are all kinds of price fluctuations depending on local events and local dynamics. So, for me, I think you have to treat that as true, and he even referred to as that saturation point as the Nakamoto point, which is basically at that point, Bitcoin's energy consumption relative to the rest of the global energy usage will kind of reach a steady state. Maybe that's 10%, maybe it's more, maybe it's less. But basically, Bitcoin will kind of find and kind of plateau at a certain point. So I think that's one interesting framework. Another interesting framework is thinking about the Nick Carter NYT piece from, was it, a year and a half ago, where they forecasted Bitcoin's energy consumption. This is during the heart of the Bitcoin energy wars. And they basically talked about how just naturally, economically, Bitcoin's energy consumption will at some point peak. For me, I don't have a strong sort of macro view because there's so much that can change. There's so many non-economic incentives that can play a role. And so one example of that would be nation states looking to mine Bitcoin themselves, whether that's as a government or through for-profit enterprises that they basically have control over. Obviously, I think most energy companies in the next 5-10 years, most energy companies are going to think about Bitcoin mining as a tool that they can use to monetize wasted energy or energy that they're forced to sell to the grid at a loss. So I think those are two very different actors, but things you need to kind of price into your long-term forecast here. One interesting application of, or if you think about the energy company come Bitcoin miner and think about that approach, then for them, it's just basically a load bank. And the load bank kind of lets you monetize. You get some revenue from that energy, but potentially we're talking low uptime. And so potentially then you're having energy companies and power plants just plugging in S9s because that some revenue is better than totally curtailing. And much in the same way, I think Bitcoin miners having to respond to that, you're going to need to have some auxiliary revenue stream, or you need to have some competitive advantage so that you're not forced to play that exact same game as these energy companies that are already vertically integrated. But yeah, and then I maybe just to add the last point to this kind of rambling about what the future of Bitcoin mining might look like. You mentioned transaction fees. Right now, if you think about Bitcoin mining today, you have a miner who maybe makes like a 4 or 5 year investment in machines. There is a window of time where that investment earns the vast majority of its returns, namely like a bull market. And maybe that's 6-12 months, who knows. But if you think maybe longer term, to the point where block subsidies go down to a great deal and you have transaction fees fluctuating depending on what's going on in the world, depending on maybe quarter ends or whatever. You might have it so that even individual days where the mempool is bloated produce the majority of a miner's returns. And so potentially, if energy companies are completely attuned to hash price dynamics and mempool dynamics, you might see the network gap up by tens or hundreds of exahash in a matter of minutes in order to just take advantage of these massive fees and these massive fee opportunities before shutting back down again. That'll obviously lead to all kind of wonky things in the difficulty adjustment, but I think it'd be really interesting. And it's actually kind of the market dynamics of Bitcoin working out really nicely, where mempool's bloated, people want to confirm transactions. You have a ton of hash rate come online to speed up block times, confirm those transactions, earn those fees, and then shutting down. And then maybe block times are more elongated, but there's less demand for the block space, so it's not the end of the world anyway. But anyway, those are just kind of the initial thoughts that come to mind when you ask the question.
Yeah, it's fascinating to try to think about Bitcoin mining in a very long time horizon. But I totally agree. I could definitely see something like that playing out, where there's a lot of idle hash rate waiting to come online, and when the revenue of that potential hash rate soars due to massive increase in block space demand, then people are, miners are all of a sudden going to turn back on and start using a bunch of energy, and then they might turn back off. So pretty interesting to think about. Yeah.
Yeah, no, it's a great point. And even just you talking about that, you could even layer in underclocking and overclocking into that, where you're underclocking your miners most of the time, and then the mempool gets bloated, TX fees go up, so you start overclocking your machines, or you go from off to overclocking as much as possible. But the underclocking, overclocking toolkit gives you a whole different range of potential strategies and tactics you can use depending on fluctuations like that.
Yeah, totally. For energy companies getting into the Bitcoin mining industry, I know this is something that a lot of people have talked about. We've seen definitely companies inching closer and closer. By no means is ExxonMobil a Bitcoin mining company today, full-fledged. Maybe they're partnering with Crusoe or whoever or other people. But do you see those energy companies becoming full-fledged Bitcoin miners, or do you see them maybe becoming hosting providers, and then other people mine the actual Bitcoin and own the machines? How do you see it playing out with the energy industry and the Bitcoin industry?
Yeah, that's a really good question. And I think there may be, think of it as maybe let's just look at three different examples. So one, you have the Exxon, you have the oil super major. Obviously, they have a bunch of wasted energy that they could use. I think you might see them start to use that as a tool, but I think we also just need to be honest that Bitcoin mining produces it's $10 billion of revenue per year, so it's still pretty tiny. So it might be an interesting way for them to salvage some assets, but whether or not it's worth the calories and them to go do that remains to be seen to me. But what that might look like is maybe they're buying old gen machines, they're using it to mine with flared gas or some stranded gas or something like that. I think that could be interesting, but I think it's unlikely to be a material part of their business. But that said, if and when they decide to do that, you're talking about competing with one of the largest companies in the world, who's just decided to enter into your industry. They have a lower cost of capital. They're more vertically integrated. They're likely are slower. But if they're buying old gem machines, maybe it's minimal capital at risk too. And it's enough to get their toes wet. And then who knows? I thought maybe an energy company like them would buy a Bitcoin miner during this bear market, but clearly that didn't really happen. So number two, I think, is an example we already have a model for, which is the merchant generator come Bitcoin miner, similar to Greenwich, which, again, Greenwich really is, I think, will be looked back on as one of the pioneers in terms of a energy company that was forced to turn to Bitcoin mining because of some regulatory changes that didn't go their way. And so they were the first, one of the first vertically integrated power plants mining Bitcoin in the United States. And so that model, it's pretty interesting because especially if you're in a RTO market, you have the ability to either sell energy to the grid, or you can mine Bitcoin with it, just in super simple terms, right? Two uncorrelated bids on energy. And so as a result, even though both are pretty volatile, you're insulated, because if energy is up and Bitcoin hash price is down, you're happy to just sell your energy to the grid. If Bitcoin price is up, hash price is up, and energy prices are down, great, you're happy to mine Bitcoin. And then you can even play that game intraday depending on what the market is like. And so I think you will start to see more of that, especially if you're like a baseload generator out in somewhere like Texas, and you have all these renewables, all this wind and solar coming online, adding volatility to the grid. And these are businesses and investments often that are dependent on subsidies. So because they're dependent on subsidies and they earn these subsidies, they can potentially sell power to the grid, even at like a loss on paper at a negative price. Obviously, that's terrible for baseload. And so maybe baseload as a defense to sort of the renewable saturation on the grid starts to mine Bitcoin, and in doing so allows themselves to monetize their energy when they can't compete with renewables on the grid. And I think that's totally fine and natural. And eventually, my dream, of what a future one day I might want to live in is where you have like a renewables driven grid that has peak capacity, peak generation well in excess of peak demand. And Bitcoin mining just is a load balancing resource that basically will just soak up that excess energy. And then whenever consumer demand spikes back up again, then miners curtail, power goes to civilians and industrial use. And I think that's like a beautiful implementation of Bitcoin mining in a grid. And talk about, reliable nuclear power 24/7 that's more dense than any other form of generation. Like that, I just think is so beautiful. And then I think maybe a third model is you could even start seeing, transmission utilities or midstream companies, basically midstream energy companies, whether that's on grid or off, start to mine Bitcoin themselves as well to just take advantage of any transmission bottlenecks or, energy imbalances and power imbalances to mine Bitcoin. And so I think eventually all of these will happen. And if a nation state owns a power plant or some generation that's not being fully utilized, they have every incentive to start dipping their toes into Bitcoin mining.
Yeah, fully agree with all of that. I do want to quickly talk about, energy and Bitcoin with, we've seen the hit piece from the New York Times just trashing Bitcoin mining. What are your general thoughts there?
Yeah, the energy debate is hard. It's hard because, and I remember when it really started in 2021, in Q1 during the bull run, I was working at Galaxy, and there was a lot of attention being paid to it. There were a lot of unfair critiques, and really, I still have roughly the same view that I came to then, which is to really engage and to really have an honest conversation around energy. We need to actually understand what energy is. We need to understand what power is. We need to understand that this isn't necessarily zero sum. We need to understand that it's not about energy itself as this fixed resource. It's about refining energy. It's about reducing entropy and creating more useful forms of energy. And we need to understand that human life depends on this, that the air conditioning, the clean water, the refrigeration, not to mention other things that are time-saving technologies that are hugely important for economic development. Like these are all tied into energy. Our view, as we wrote in our shareholder letter last year, is that all wealth creation is just the reduction of entropy. And so if energy is the reduction of entropy, and then all forms of wealth creation depend on energy and are themselves reductions in entropy locally, then like if you establish those priors, then you can have an honest conversation. You can have an honest conversation around which forms of energy generation are better than others, which are more dense, more reliable, cheaper without subsidies, long-term economic sustainability. I think then we can have an honest conversation. But it's hard when the New York Times hit piece comes out because it's just disingenuous. It doesn't actually address the root of the issue. And they assert a call it battlefield, a playing field that they're basically asking you to play defense on by putting out that narrative. And so thinking about the Bitcoin Twitter in general over the last 12 months in the entire space, a lot of the discourse just feels so tiresome. And in part, for example, with this New York Times energy piece, it's like, guys, we're just continuing to play defense here. We're continuing to accept the narrative as they assert it and refute marginal emissions analysis, which is just totally bullshit, totally something that, no other industry is held to the same standard on. And I think really if we want to win that debate, we just need to put forth a better future. Not one where we're all going to use less energy and tough shit to the developing world because you're never going to industrialize or develop resources that give you stable access to electricity unless it's wind and solar, which have not been proven to be viable in terms of providing all the energy of a region, basically anywhere. Grid scale and industrial scale storage and batteries, definitely very much a pipe dream. We don't have the supply chains to do that. And by the way, if it was really about being zero carbon, why are we shutting down nukes, Germany and New York State? So I think with all these things, it's like you're dealing with disingenuous actors a lot of the time. Now because of their sort of incumbent position, they're driving the discourse where, my mom is asking me about the energy debate in the New York Times article. Like random friends that I meet up with, they're asking me about this article. And, it's important for us to continue to engage and to relentlessly engage with this. But I think we just need to kind of understand what we're doing. And if we just continue to, as Marty Bent describes it, accept this framing, we will lose. I think we need to prove to them what we're capable of doing. And really, in this sort of post, the COVID vibe shift, just generally across the discourse, and maybe it's called this collective fear of an impending recession. I think the reality is that this is a perfect example of the zero-sum Malthusian mindset, where you have all these folks basically saying we need to use less, we can't grow, you need to only accept wind and solar energy generation, and we'll just forget about the long-term implications of that. I think we need to say no, fuck that. We want cheap, abundant energy for the entire planet. There are some technologies that are better providing that than others. Bitcoin mining can play a really important role in that, and obviously, I think Bitcoin eventually wins because the truth will out. But I think we just need to do a better job of framing this debate. And I'm grateful for these keyboard warriors who are going line by line saying this isn't fair, this isn't fair, this is an error, that's an error. But it's just personally, I think that sort of defensive work will never win the battle in the end.
Yeah, I definitely agree. We kind of do. More Bitcoiners need to reframe the argument and really just kind of show, not even really argue with them, just be like, actually, energy usage and energy production is good for humanity. It's good for all of us, and that's the game that we should be playing. Last question, then I know we can wrap it up. What is hyper-Bitcoinization to you, and do you think it will ever occur?
So it's a great question. Hyper-Bitcoinization to me. Maybe I'll walk you through maybe a little what a day in the life of a hyper-Bitcoinized world might look like for me. I wake up in a nice small city, somewhere pleasant, somewhere beautiful. The weather's warm. I walk down the street. Fortunately, this is after Kelly Lannon has infiltrated the broader architectural landscape, and all the buildings are beautiful, made using local materials. It's a nice, lovely morning. I stroll down the street to a cafe. I have a raw milk cappuccino that's 6 ounces. And, I start reading a book. And the collective consciousness, the collective vibe is one of low time preference, where people are they're not sweating about this. They're not on this rat race of growth as they basically run down this fiat hamster wheel. They're thinking about building families, building things that will last for multiple generations, building things that will last for hundreds, if not thousands of years, versus basically shoddily made pseudo luxury high rises in cities that all really are just built like shit. So I think like that for me that's kind of the world I one day want to live in, where you have an SMR that's attached to the city, and you have a Bitcoin mining data center that balances the load. Those are the things that I think that get me really excited. Now, in terms of hyper-Bitcoinization, whether Bitcoin is used as money by everyone in the planet, or whether it's used as a reserve currency, I'm not really sure. Obviously, I prefer the former. But I think one thing that's been clear, especially over the course of the banking crisis, even if you think about the Russia sanctions, this current system is not sustainable. The number of people who basically thought their money was always safe if it was in a bank, and then they're finding out over the last few months that that's not true. That really the government will pick and choose which banks they protect. They'll continue to invent new technologies and new facilities in order to prop up this fragile system. This isn't sustainable, and I think more and more people are appreciating that Bitcoin is the lifeboat. And there are many wrongs of the last 100 years, but really, Bitcoin's a lifeboat. More and more people are going to get on it. What happens after that, I don't have a high degree of conviction or a high degree of certainty. I just really think it's important to continue to get as many people on the lifeboat as possible.
Absolutely. Love that. Drew, I think this was an epic conversation. Where can people learn more about you and Cathedra?
Yeah, definitely, and really appreciate you having me again, Joe. I've been a big fan of yours on Twitter for a while now. So I think the best place to learn more about Cathedra is just cathedra.com, or you can follow us on Twitter at Cathedra Bitcoin. And then I'm also on Twitter at _Drew Armstrong _. But yeah, no, I think we'll be looking to release more and more findings as we progress over the next couple of months. We've already published a lot about our underclocking. AJ and I have written at length about energy, and I'll likely continue to write about energy just because I can't help myself. But yeah, definitely please follow us. Get in touch if you ever want to chat. We're always happy to talk.
Awesome. Yeah. Thanks for coming on, and I'm sure the audience is going to love this.
Oh, and one last thing I should also say, we are a publicly traded company. Our ticker is under TSXV. It's CBIT. And then on the US OTC listing is CBTTF. Again, all this is on our website. All of our financials are on our website, but just wanted to highlight that as well, that we are public.